All right, so let me say hello and welcome to everyone. Doug here with the LincolnList.com, and let me welcome you to another weekly edition of Stock Market Mutterings, where I always say I will do my best to take a grope in the murkiness, try to make some sense out of this market, and as I have my work cut out for me this week doing that, and hopefully I can provide you with some quality trade setups to put some money in your pocket as always. I'm going to post a couple of links right up there on the screen. One is to our live trade room. Every day that the market is open, we are trading live, so feel free to join us any day. Each one of you are welcome to join. And also, I have put together some new training packages here for the end of the summer, some discounted trading packages, some private training packages, and everything. For those who are interested in a little bit more one-on-one attention and taking your trading to another level, there'll be some links there on the screen. Feel free to cut and paste or click them. So let's kind of talk about the SPY, and I think it went through a little bit of an identity crisis here after the Fed, because we were kind of hanging out at the beginning of the week, just chopping back and forth, which is to be expected when you have a Fed meeting coming up, and this market is sort of in this sideways chop back and forth. So it made this, when I'm saying that, we come off the bottom there in March, off of the lows there, March, April. And it's just been a really consistent melt up, straight up rally. Q's made a new high, but the Dow and the SPY did not. But they're just sitting around here hovering in this tight range over the last couple of weeks. So prior to the Fed, that's what it was doing, and that was understandable. So when the Fed comes out on Wednesday, you get this massive rally. I mean, it just runs right into the Fed, runs after the Fed, and it looks like, okay, everybody's buying into the Fed. They're going to take care of us. They're going to keep pumping money into this market. We're just going to keep on going. Well, that's not how it worked out. Thursday, it kind of starts showing you this bearish argument about the market pushing down, and it got into some of these areas of support down here, these 319s, where this thing has been kind of working from the middle part of July for support. I'm just looking at this chart over here, by the way. This is a daily chart. I've got it magnified. And then it kind of follows that up with Friday. It had like a weak bounce there on Thursday. It's like, okay, this thing really might be going through this indecision period. And it looked like it was ready to sell off on Friday. This thing was just like straight down, testing these lower areas of support. And it just come off at the bottom like it has so many times with these violent shifts. And last week was one of those. It was a week of violent shifts where the market would show you these fades and then all of a sudden just jam it right in your face. This late day rally, I mean, look at this, almost no stopping whatsoever. 322 to 326. I mean, nonstop. This is a 5-minute chart. You've got like two tiny little red candles in it. What a bounce. I mean, that is a hell of a bounce close to support. So if you kind of block all of that out and we open back up this daily chart, I mean, it is still holding really steady at that support, and they come off of the bottom there. That's a pretty big tail wick at the bottom. You know, you had one there on Thursday, a big one on Friday, and you're just sitting right up here at this resistance. So here's kind of where we're going with this now. We really got to watch early on this week how this 327 is going to react. This is resistance here for the short term. That's taking us back to the later parts of July here, roughly in this 327, the low 327s. So let's just see how that reacts. I mean, maybe the market gaps above that when the futures open. I don't know. Maybe we pull below that and then rally past it later. But some point Monday, I think, just like we said a couple of weeks, what happens tomorrow will set the tone for how the rest of the week, may play out. If we can get through this 327, it can hold that, then we're going to probably start working on some bigger upside targets. I mean, this is a big level. You can see it right here, even kind of coming back here to the 8th of June. This is big. And I think if it does clear that, then you can start making the case for all-time highs, because they're not too far off at 339. I mean, we've seen this type of a move in the Qs when they did it. So as it stands now, even though the intraday action has gotten a little volatile compared to what we were experiencing just a few weeks ago, it's still a bullish chart. It's still holding that area, and I would still remain bullish as long as we're trading above the 319s and holding above that 319s. I think the regular tempo, the overall tempo, is going to be bullish, and this thing's going to try to make a move towards the highs. Now, I also think it's not going to be so cut and dry like it's been in the past, where you just got this slow melt up, where this thing just kind of trickles up and up and up with no down moves. I think you're going to see a little bit more. You're going to see volatility like we have been seeing here probably for the first couple of weeks of August, where you're getting these immediate shifts in the market where it starts selling off and it looks really aggressive and everybody's like, oh, we're going through March crash again. And then buying this thing back up. So pay attention to those levels. That's the range we're working in. Basically, over 327, we're probably going to start looking at all-time highs if that happens. If you start getting under the 319s, then maybe you got to start looking at these 200-day moving averages or working yourself maybe a little bit closer to 310s or the 300s. So that's the deal there with the market. We'll just have to see how it opens up. Still, the Qs remain the strong group here. All these tech stocks. And I think also a lot of attention was focused on, you had some big names that were reporting earnings this week, like Amazon, you had Facebook, you had Apple, and all of these did a really good job with their earnings. And that probably surprised a lot of people because, again, these stocks have gone up a lot, especially in that tech sector. You have stocks like Apple and Amazon went up monstrous. I mean, look at this thing. It was in the 1500s, 1600s here in March, and 30. I mean, they've just huge moves. And these earnings actually justified these moves. Now, I feel also that we're in this point where the market's going to have to build off the momentum of these big name earnings. This is an opportunity for the market to pull the money and the cash that's on the sidelines and pull it back into the market on the tail of these good earnings and try to rip it higher. That may be another thing we need to look at if that doesn't happen soon, and maybe we need to fish around and look for some lower prices. But just kind of going forward, the theme is we're still bullish. Out of all of them, technology is still the leading sector that you have to look at here. And should definitely focus on most of those for your longs. Now, there's a couple of setups I want to look at. Some of these have kind of traded sideways a little bit here. Obviously, some of these I mentioned. I like trading the same stocks over and over again, but I want to kind of look at Lulu here. Pretty good consolidation. It's just kind of floating up here and just doing a real good job of holding support, but doing a real bad job of attracting any additional buyers. I mean, basically, this thing hasn't done anything in about 1 month. It's had some good days, it's had some bad days, but it's kind of traded sideways. So depending if we start to see the market lift a little bit, I think this might need some market help here. But I'd be looking for this thing to start to attract some attention. I definitely don't expect it to trade this following month in this sideways consolidation pattern and just chop back and forth. At some point, it will continue to make a really strong move in one direction or the other. So let's kind of watch Lulu here. AVGO is another one I've been watching. I think I might have mentioned this one here. Oh, let me type this in. AVGO. Another one here that's just kind of sideways. I mean, I'm just digging around looking at charts that are moving in these tight consolidation periods, waiting for, at some point or another, they're going to break either the upper range or the lower range. This one's done a really, really good job of holding a lower level. I mean, look at this thing's hit about 6-7 times back here in late June. Oh, it's actually, yeah, late June in the 302s. Tested that a couple of times as late as the 24th of July. And this is pretty solid. It looks like this is the line in the sand for this thing. And you got a couple of day bounce here, Thursday and Friday. So I would look for this thing to at least start trading back up to the 325 resistance. And then maybe if you get a move above that, you'll start to see something a little more aggressive. Now, for you people out there that like to short, pay really close attention one way or the other to this 303 level. If that does not hold at some point, you probably will see a much more aggressive move that will send us closer to the 200-day moving average. It's something that pushes this thing down a little bit more. Also, this NEO, a little cheapy here, this NEO, pretty good looking stock here, a former vertical stock that has pulled back nicely, also building some consolidation. I don't think I'm interested in this one unless we can start trading above the 13s. Again, you start pressing above the 13s, 1320 area, you start getting through that. You might see another leg that looks very similar to this one right here. So besides that, I think you always have your Twillows and your Etsy's and Facebooks and Apple, and I think you always have those to trade on a daily basis. Definitely something like an Nvidia, an AMD. A lot of these stocks we've already talked about. So if I can just kind of put that basket together, you got your Netflix, Nvidia, Facebook, Twillo, Etsy, Adobe, Roku, ZM, Docu, Peloton. All of these are still great trades if you get some good intraday setups. I think they're still relatively bullish. I don't know if I'm an investor in any one of those right now because of their high charts. But anytime you get a flush, a washout, a dip, a pullback, most likely it's a long. There's going to be trades in those names every single day. You could put Tesla on that list as well. So anyway, guys, Excuse me. Anyway, thanks for watching this week's edition of Stock Market Mutterings. Down in the comment section, tell me what you guys are trading. Tell me how things are going. Don't forget that every day that the market is open, you're more than welcome to trade with us live. If you need additional help, make sure you click on those links at the beginning. Get you some private training, get you some one-on-one attention, and really make a good career out of this. Until next time, guys, take care, trade well. Talk to you next week.